Hi everybody, how are you all doing today? I want to thank you for joining OnDeck's first webinar, and we're really excited to be starting this series of webinars. Right now we're going to be doing them every other month, so I hope to see all of you here for future events. Today we're going to be talking about understanding business credit. Over the next 45 minutes, you're going to learn how credit works for business owners to successfully borrow, the 3 things lenders really want to know about you, why your personal credit score is relevant to your business's credit worthiness, and how you can strengthen your business credit profile. And lastly, how you can actually access your business credit profile. Let me just introduce myself. My name is Ariel Kranzow, and I'm the Marketing Content Manager here at OnDeck Capital. For those of you who don't know OnDeck, we provide small business owners with business financing they need quickly, online, over the phone, without the hassle of ever having to leave your office. We understand small business owners are busy, and we want to get you the funding you need as quickly as possible. Before I introduce our speaker, I want to go over some quick ground rules and a little bit about the webinar platform so that you know where things are and what's going to be happening throughout the webinar. First, if you have any questions that you think of during the webinar, you should ask them in the question box, which should be on the right side of your screen. We'll do the Q&A at the end of the webinar, so our speaker is going to speak for a little while and then we'll have a Q&A, so stick around to the end and we'll answer as many questions as we can in the allotted time. If a question is not answered by the end of the webinar in the Q&A, we'll email you after with the question that you have, and we'll email you the answer afterwards. Something for you to also see on the right side of your screen is there should be an area that says handouts. We have a couple of ebooks for you to download that discuss business financing in general and some other areas of business financing. And then don't worry, if you don't feel like taking notes this whole webinar, we're going to send you a link to our slides after the webinar is over. So we don't want your hands to get tired. Just pay attention and listen to what we're saying during the actual webinar. Think of any questions you may have, and you'll have all the details in your inbox after the webinar is over. And then one more thing is that we're going to have a few polls throughout the webinar. So if you see a poll pop up, all you need to do is click on the most relevant answer to you, and that'll help us understand a little bit more about who's watching, and we can gear our conversation towards you a little bit more. So like I said, we're going to be doing webinars about every other month. The next webinar is going to be on Wednesday, August 23rd, and we're going to be covering questions about what business cases are best for short-term business loans. So if that's something that you're interested in, we will send you a link to the webinar after this webinar is over. We'll send you a link for you to go and register, and don't worry, we'll remind you when it's coming up. And so it still looks like some people are joining the webinar. So why don't we pop up one of these cool polls. And here's a really easy question, which is, are you a business owner? Either you've been a business owner for a long time, you're not a business owner, you might have a good, close relationship with the owner of a business, or you might be thinking about starting your own business, and I think that that's all really cool. And just knowing who's on the actual webinar will help us answer questions and gear our conversation towards you a little bit more. So I'll give you guys a couple of minutes. Right now, it's overwhelmingly that people on this webinar are business owners at 85, now 86%. 5% of you are not business owners, which is awesome. It means that you have a good relationship with a business owner. You just want to understand a little bit more about what business credit is. The rest of you are thinking about starting a business, which is super exciting. We love people who are thinking about starting their own business. They're always the most interesting people to have a conversation with. You've got tons of ideas all the time. All right, I'll give you a couple more seconds to put in your answer, and then we will close the poll. And here are our final results. So 88% of you are business owners. That's awesome. We're really happy to have all of you here today. And so now I actually want to introduce our speaker. His name is Ty Kiesel. Ty is the small business educator and content editor at OnDeck. He has over 30 years of small business experience, and having been a small business owner himself, he's a wealth of knowledge on all things related to small business and small business financing. And you guys didn't come here to hear me talk, so I will now pass it over to Ty.
I'm really excited to be here. You know, I don't think I need to tell any of you this, but the world of small business financing has changed a lot in recent years. You don't have to search very far to find an article about things that are different. You know, it's one of the biggest challenges small business owners face is accessing the capital that they need to fuel growth and keep their business strong and healthy. And you know, fortunately though, there are more financing options available today than ever before. For example, non-bank lenders like OnDeck have we've lent over $6 billion to small business owners just like you. In fact, over 50,000 small business owners since we opened our doors in 2007. So there are lots and lots of options available in addition to the traditional options like a bank or a credit union. So what does that mean for your business? Businesses that might traditionally not be able to get financing are now able to. This business, for example, a local restaurant, they've been in business for 3 years. The business owner has a personal credit score of 680. They've got $750,000 in annual revenues, and they're profitable, but they don't have any collateral. So if they were to go into a bank, the odds of them getting financing would be very small. But now, today, this type of business is considered a good business for many small business lenders. And we're going to talk about one of the factors that influences your ability to get financing. And before we do that, though, let's dive into another poll. And it should be coming up here any second. So how long have you been in business? Are you a new business? Have you been around for a while? It looks like we've got a lot of very experienced business owners so far clicking in. That's great. And it looks like the majority of you so far are 10 plus years in business. That's good. I'm really excited to see you tuning in to learn more about business credit. It looks like the other 43 or so % has been in business between 5 and 10 years. So it looks like 1 to 5 years is the second place. 5 to 10 years is next. And I'm convinced that what we're going to talk about today will be relevant to all of you. So with that in mind, let's talk a little bit about credit. So understanding how credit works is critical to your business because of all the questions that I ever get asked, the relationship between business and personal credit is one of the most frequent. Every small business owner in the United States has 2 credit profiles. They have their personal credit score, which most of you are familiar with. Between 300 and 800 is the score. We're going to talk about that for a little bit. And then they have their business credit profile. And probably the biggest misconception for small business owners about credit is that they do indeed have a business credit profile. They need to understand how it works, and it's all kind of foggy in their mind. So we're going to talk specifically about how business credit works, and specifically about some of the things that business is about business credit that is different from personal credit. You know, when I started in my career about 35 years ago, there were lots of business owners I knew who were very pleased to say, I've never had to borrow, and I've always paid cash for everything. And while that is laudable in some sense, it might not be the best thing for your business if you ever down the road need to borrow. This particular business owner, he's 5 years in business. He has a good cash flow and average credit, but he's never borrowed. He's never used a business credit card. He's never used a trade account. And basically what that means when it's time to apply for a loan is that there is no data about he or his business. So I'm not an advocate of just using credit to use credit, but I think that the wise use of credit when it makes sense is a really good idea. And so now let's talk a little bit about your personal credit score and what makes up your score. Your payment history is probably the most significant thing. So do you make your mortgage? Do you make your mortgage on time? Are you making your car payments on time? Are you current with your personal debts? And then the amount of credit that you owe versus the amount of credit you have access to is 30% of your score. So if you're maxing out your personal credit cards every month, it will negatively impact your credit. The length of your credit history is also important. So even credit accounts that you very seldom use, but they've been around for a long time are probably good to have, because that's 15% of your score. New credit inquiries also impact your personal credit score. So every time you apply for a new department store credit card or something like that, it's going to ding your credit score. Now, if you're looking for if you're shopping for rates for a house or to purchase an automobile, the credit bureaus take that into account, and they know that you're probably going to be looking at more than one application. But generally speaking, new credit inquiries do impact your personal credit score. And then the type of credit used. For example, what the bureaus like to see is that you're able to use a variety of credit types. For example, do you have a mortgage? Do you have a car payment? Do you have a credit card? Are you using revolving credit somewhere? Those kinds of things are all going to impact your personal credit score. And so basically, the reason small business lenders are looking at your personal credit score is it's part of the equation to determine your creditworthiness. Now, some lenders are going to weight your personal credit score more than others. For example, traditional lenders like banks and credit unions will use your personal credit score as a go, no-go metric for further discussions. Other lenders, online lenders, for example, it's part of the equation, but it's probably not going to be the determining factor as to whether or not you get the small business loan you're looking for. And basically what lenders are looking for is the answer to 3 questions. Can you repay a loan? Will you repay a loan? And what will you do if something unexpected happens? Can you repay a loan is why they ask you about your revenue. It's also why they ask about they may want to see bank statements to see your cash flow. Is they're looking to see if you have the revenue to actually repay a loan. Will you repay a loan is why they're looking at your track record, how long you've been in business, what your credit history is, because they want to make sure that even if you can repay a loan that you will, or historically that you have in the past. Because basically what they're doing is they're evaluating your creditworthiness today based upon things you've done in the past. And the third question, what will you do if something unexpected happens? They want to be able to determine whether or not, regardless of your situation with your business, that you'll still be able to make each and every periodic payment, including the very first one. Now, like many of you, I look at this and I agree that your personal credit score and your business credit profile tell different stories, and your personal credit score is probably not going to be a reflection of how you meet your business obligations, but it will likely, for most small business owners, always be a part of the equation. And so it's important to understand kind of what we've been talking about, what's included in your personal credit score, and now we're going to talk a little bit more about your business credit score or your business credit profile. But before we do that, let's take another quick break for a second and launch another poll. Do you know your personal credit score? And I am incredibly pleased to see that the lion's share of you actually do know your score. 88% so far. So 88% know their score, 12% don't. To the 12% of you that don't, the federal government in the United States ensures that every year you have access to your personal credit score at least one time during the year for free. Now, I personally have a relationship with one of the credit bureaus so that I can review my score whenever I would like. And not only that, I get a notice anytime something new happens with my credit score. So I would encourage all of you to become very familiar with your personal credit score. Now let's talk about your business credit profile. And the reason I call it a business credit profile is because unlike your personal credit score, which is a fairly universal score regardless of whether you go to Experian, TransUnion, or Equifax, it's based upon your FICO score, and they're all going to be very similar. Some of those credit bureaus, they may weight things a little bit differently, but by and large, those scores are all going to be similar. Your business credit profile, on the other hand, is actually a collection of scores, and it could be very different from credit bureau to credit bureau. So what does your business credit profile say about your business? It's going to have general information about your business, like your address, where you do business, you know, those kinds of things that are part of your business license. It's going to include information about the credit relationships that you have with your suppliers. So if you're working with a supplier who gives you 30 or 60-day credit terms, it's going to have information about that. And it's also going to have your payment history with any current business loans you might have or business credit cards. So where do you find your business credit profile? There are several credit bureaus out there for businesses, but the three biggest are Dun & Bradstreet, Equifax, and Experian. These three all offer you the ability to look at your credit score, or your credit profile rather, with their business bureaus. Now, there will likely be a fee associated with that, but it is critically important that you, in the same way you understand your personal credit score, that you investigate your business credit profile. And the two biggest drivers that influence your business credit profile are your credit history and all the information that your creditors report to the credit bureaus, and information that's in the public record. So it's really important that you have a handle on both of those bits of information. In fact, I would recommend that in addition to looking at the credit bureau, make sure that what the state and city where you do business has on file regarding your business is accurate and correct. It's not unusual for there to be errors in the public record, and something as relatively insignificant as the category that you do business in can put your business in a higher or lower risk category and can negatively impact your ability to get financing and ultimately hurt your business credit profile. Different lenders are going to look at different information, but typically they're going to look at your personal credit score, they're going to look at your business credit profile, they're going to look at your cash flow, your annual revenue, your time in business, and your industry. Now, depending upon the creditor, but depending upon the lender, they may weight this information a little bit differently, but they're all going to be looking at this kind of stuff. Now, I thought it might be really interesting now to dive into a sample Dun & Bradstreet business credit profile so that you can kind of get an idea of the type of information that the business credit bureaus collect about your business. Now, Dun & Bradstreet is only one of them. However, they're all going to be kind of similar, but Dun & Bradstreet's the oldest. They've been around for over 100 years. So let's kind of dive in. This Gorman Manufacturing Company is a fictitious company and is strictly designed to give you an example of what the Dun & Bradstreet credit report would say about your business. And you can see that in addition to the Paydex score, which is probably the most recognizable business credit score, they're looking at other information like your commercial credits class, the financial stress that your industry might be in, as well as the credit limit that they would offer you and a D&B rating. So we're going to talk a little bit about some of these more specifically. For example, the Paydex score of this particular business is 74 on a score from 1 to 100. So for the most part, this particular business is making their payments when they're supposed to. Average of 9 days beyond terms is what this report is saying to them. So their creditors are reporting all of their transactions, and that's what's reflected in the Paydex score. They're also looking at the public record. Are there any bankruptcies? Are there any judgments, liens? Is there a lawsuit? Are there any UCC filings? And at any time a lender offers you a small business loan, he's going to file with the UCC. So they're going to be able to see that. Your creditors who are looking at your Dun & Bradstreet profile are going to be able to see that there are 3 other filings made about your business. They're also going to look at your business category, and they're going to compare your business with the financial condition of other businesses in your category. In this instance, this business has a fair rating in their category. And additionally, they're going to look at the financial stress of that industry. This particular industry has a little more stressful financial stress score than other businesses and than other industries that Dun & Bradstreet looks at. They're also going to look at your Paydex score compared to the industry trend. And you can see in this instance, up until about 3 months ago, this particular business was trending a little bit above the industry standard, and now they've dropped down to about what the industry standard is. So this is the information that your creditors are going to be able to view, and the information that these guys have on your business. Now they are going to give you a Dun & Bradstreet rating. So they're giving you this particular business a financial strength of 3A, indicating $1 to $10 million in business, with a composite credit appraisal of 4, which is a limited credit. They're looking at your sales, so they're going to know what your annual revenues are, and they're also going to look at the business's net worth and how much working capital that this business has. They also are going to look at how much your average credit limit is, what your highest credit limit has been, and your total credit based on this particular business 23 credit experiences. Now, Dun & Bradstreet is also going to make a recommendation as far as how much credit they would extend to this particular business. They're going to give a conservative credit limit and an aggressive credit limit, and you can see here that what that is, $200,000 and $400,000. They rank this business in a low credit risk category, and so the credit score class of this business is based on a little bit higher risk and on delinquency for this particular industry, the business's financial ratios, the proportion of their past due balance compared to the total amount owing. There is evidence of open suits and judgments, and the proportion of slow payments in recent months. So that is why they're scoring the business a 2 in this credit score class. Now, they're also going to make some comparisons. So this brown business here, this is the business that we're looking at. They're going to compare the business to other businesses within the region, which by comparison, this particular business is doing a little bit better. They're also going to compare this business to other businesses in the industry that they do business in. And again, they're doing a little bit better than the average business within their industry. However, when they compare this particular business to other businesses with the same number of employees, they're not doing any better, maybe even a little bit worse. And when they compare to other businesses within the that have been in business for the same amount of time, which in this case is 26 plus years, they're doing about the same. So this is all information that the credit bureaus have about your business. So I guess the next question is, once you know what the credit bureaus have about you, how do you improve your business credit profile? And that's what we're going to talk about next. But before we do, let's drop for just another second into another poll. So the last time I looked at my business credit profile was within the last month, within the last 6 months, within the last year, more than a year ago, or I've never looked at my business credit profile. And it looks like the majority of business owners that are with us today have not ever looked at their business credit profile. So I'm really glad you're here, because this is super important information, and we're going to talk about why and how to make sure you have a strong credit profile in just a few minutes. I was speaking with Levi King not too long ago, who is the founder and CEO of NAV. They do business credit reporting, and he expressed to me that the business owners that are regularly reviewing their business credit profile in a survey that they did were actually 30% more likely to get a small business loan than those that didn't. And I asked him how often you should be looking at your business credit profile, and he suggested that at least once a month. And you know, before talking to him about this, I thought if you visited your profile on a quarterly basis, that was probably a good frequency. But in reality, the things that we tend to impact as business people tend to be those metrics that we pay attention to. So even though it may sound overly simplistic to suggest that regularly reviewing your profile is going to improve it, I think because you're paying attention to it, you're going to take those actions that are going to make it more possible for you to actually have a good credit profile. So regularly review your credit profile. I'm going to recommend once a month. Make sure it's accurate. Make sure that there are no mistakes in it. Make sure that the information in the public record is correct. Also, all of the business credit bureaus have a review process. So if you find any errors in your credit profile and you can document that the information is incorrect, they will correct them. Now, the process might take a little while, but if you can demonstrate that you have inaccuracies within your credit profile, it can be corrected. So the number one way to start improving your business credit profile is know your profile. Understand where you're at. Number two, don't use your personal credit for business purposes. Now this is really tough, because I know that when I started my first business, I leveraged home equity to get started. And so what you want to do is, as soon as possible, you want to start looking at ways to build your business credit profile and avoid using personal credit. I spoke with the folks at Experian a year or so ago, and their advice was, as soon as possible, avoid using your personal credit whenever you can. And I think the reason that that's so important is actually twofold. One is using your personal credit for business credit purposes does absolutely nothing to build your business credit profile. And number two, by leveraging your personal credit, you tend to maintain higher balances on your, say for example, a personal credit card, which, as we talked about earlier, it could negatively impact your personal credit because you're maintaining higher balances relative to the credit you have available. And that's true even if you pay off your personal credit cards every time the payment is due. So it doesn't help you build your business credit profile, and it can actually hurt your personal credit score. So what you need to do is start looking for ways to establish business credit. And it's hard the first couple of years in particular to go into the bank and get a small business loan. However, there are ways that you can do it. I was speaking at an Amazon sellers conference last year about this time, and one of the things that I recommend is that first year or two, for that 11% of you that are just brand new, I would focus on building trade accounts with your suppliers and looking for ways that are relatively easy to start establishing credit accounts so that you can start building a credit profile. Vendor credit is relatively easy to get. Most vendors, they offer 30 or 60-day terms to their best customers. And although it might not be a $100,000 small business loan, it does give you an opportunity to start building a good credit reputation. And it's just an incredible way to do that. Number four, you want to make sure that those creditors report your good credit behavior to the appropriate business credit bureaus. If they don't report, it does you no good generally. You may be building a good, strong credit profile with that particular vendor, but you're not building a strong credit profile with the credit bureaus. So make sure that you request that they report your good credit history. Some small business owners even make this a part of their vetting process for new vendors. Now, the last thing you need to do is use the credit you need and stay current. This is the most single important thing you can do today to start building your business credit profile. Now, that same Amazon conference, one of the questions that they asked a panel I was sitting on was, when should I borrow? And one of the lenders on the panel said, you should borrow as much as you can, whenever you can, because you're never going to know when you have the opportunity to borrow again. And I totally disagree with that idea. You borrow what you need, and you don't borrow anymore. I grew up in a small business sweeping the warehouse floor for my father, and his attitude about credit was, granted, very conservative, but he was of the opinion that if it doesn't build an increase in ROI or improve the value of your business, you shouldn't borrow. And because regardless of where you go to get a small business loan, there are costs associated with borrowing more than what you need, or borrowing when you don't really need it, when there's no opportunity to grow your business, it can put your business in danger. We live in a society that wants us to believe that every problem associated with running a small business can be solved by access to capital, by having cash available. And I suggest that that's not the case. If you borrow at the wrong time, you can actually put your business in danger. And in fact, you don't have to look very far in the news to see countless businesses who have borrowed their way out of business. So use the credit that you need to grow your business and build a healthy business and stay current, but don't borrow when you don't need to borrow. So a strong credit profile is a really important part of finding the right small business loan. So when I talk to people about this, there are basically 4 questions that I encourage them to ask themselves. The first question is, why am I looking for a small business loan? The loan purpose, it's going to give you a lot of really important answers. For example, is it a short-term need you're trying to fill or a long-term need? That's going to direct you into what type of financing makes sense. Does it make sense, like, for example, if I'm borrowing to purchase quick turnaround inventory that I'm going to sell in the next 3 months, does it make sense to borrow with a 5-year or longer term to meet that particular need? Or does it make sense to get a shorter term loan? It's also going to tell you how much you need to borrow. Because like I mentioned before, I'm of the opinion that you borrow what you need and don't borrow any more. The costs are too expensive. The second question is, which terms best fit my situation? I don't know anyone in my personal circle who would go in to buy a new car and expect to get a 30-year auto loan, regardless of how inexpensive the periodic payment was going to be. It just doesn't make sense. So in my opinion, the loan term also needs to fit the loan purpose. So short-term needs are best suited to short-term types of financing. Long-term needs, like purchasing a new building or expanding your warehouse facility, may be better suited for a long-term type loan. And then, how much money do you really need? Borrow what you need, and don't borrow any more than that. And then the fourth question is, what does my business credit profile look like? So that's the fourth thing you need to ask yourself, and why it's so important for you to be aware and knowledgeable about what your business credit profile looks like. Now, a good credit profile isn't a guarantee, but it will give you options. There are nonprofit lenders, the Small Business Administration, banks, credit unions, online lenders like OnDeck. There are loan matching sites. There are lots of options available for you to borrow. But if you have a poor credit profile, it's going to narrow those options down, and you're not going to be able to pick the best financing for your particular loan purpose and situation. You're going to be offered you're going to be offered those loan options that are strictly based upon your credit profile and the health of your business. So a good credit profile isn't a guarantee, but it does give you options. Now, this would be a good time to break for another poll. If any of you are looking for business financing, we would be happy to speak with you, so just let us know here. And it looks like there's quite a few of you in the next 6 months or so that are looking for financing. And what will happen is, following the webinar, we'll reach out to you and help you engage with us if that's something you would like. And this information, regardless of whether you're looking for a loan or not, which is about a third of you, is we're happy to share with you. It's because down the road, this is going to be valuable information for you. And so right now, I am going to turn the time back over to Ariel to wrap up. I really appreciate you you joining us. I hope this information was valuable for you.
Great. Thank you, Ty. That was incredible. And thanks so much for that deep dive into business credit. I know that I've been talking about business credit for a while, and I think I just learned way more than I thought I would before I started this. So now we're just going to take a few questions from the crowd. Just a reminder, the next webinar is going to be August 23rd. We'll send you some information about that at the end of today's webinar. If you have any suggestions for other webinar ideas, please email me directly. My email is on the screen now. Or you can just enter them into the question box and that will record for us. It will be really helpful to get you guys the information that you're looking for. So the first question that I see that was just popped up is, if my vendor doesn't report to the credit bureaus, how can I find vendors who do?
You know, that is a great question. And I'm going to give you two responses. The first response would be to encourage that vendor to report your credit history. Basically, it's going to require them to create a relationship with Dun & Bradstreet or one of the other credit bureaus, but it's not only going to benefit you because they report, but it's also going to benefit them because they're going to have access to the Dun & Bradstreet information about all of the people that they offer credit to. I also often get asked by small business owners, should I create a relationship with the credit bureaus? They'll say, Dun & Bradstreet reached out to me. Is it worth it to my business? And my answer is usually a very qualified yes. You should look into it and make sure that it makes sense for you, but don't automatically dismiss it. Now, the real answer to your question, how do you find vendors who do? As you're vetting vendors, ask. Make sure that's one of the questions that you ask them. In addition to what's the cost of goods and, you know, do you deliver and all of those things, I would make sure and ask them, do you report my good credit history to the credit bureaus? So just make sure you ask and encourage those that don't to start doing it.
Okay. All right. Thank you so much for that answer. Our next question is kind of a two-part question. It says, does it cost money to access your business credit profile? And does checking it monthly, as you suggested, hurt your credit score like it does your personal credit?
It could cost you a little bit. If you were to go to Dun & Bradstreet or Experian or one of the others, they charge a modest fee. Another option for you is to create a relationship with a company like NAV. NAV.com is where you can go to do that, and you can get a regular report on your business credit. And no, it doesn't hurt your credit profile to check your business credit on a regular basis. However, as I mentioned in the program, checking your business credit profile once a month is not too frequent, and in fact is a really good idea.
Okay. And then here's another question. I've been one-on-one coaching for 20 years. I'm looking to launch my business for my online training programs. Are these going to look like two different businesses to lenders?
You know, that I don't have the answer to. I guess it's going to depend upon how you structure them. If you structure them as two completely separate entities, then they will probably look like separate businesses. But I'm not sure I have the right answer to that. So I would talk to your accountant or other financial advisor to see how legally those entities are put together so that you'll have a better idea. But I'll be honest with you, that's a question that I have never been asked, and I'm not sure that I have the answer for you. But I will find out, and if you email Ariel in that in that email address that she gave earlier on. I will get back to you with an answer.
Okay. And I just sent her that question.
Okay, awesome.
Okay. And then here's another one. I don't really know what this means, but someone asked, I use Hoovers to track my business credit profile. It's a part of Dun & Bradstreet. Is that adequate for checking the profile?
You know, if does Hoovers dive into the same level of information? I think they're going to give you the Dun & Bradstreet score, but I think that's, you know, if you already have a relationship with Hoovers, I don't think that's a bad choice. What you want to do is just make sure that they have all the information available that you can actually dive in and understand why your credit profile is the way it is. Part of the value of looking at the Dun & Bradstreet report that we just did was so that you can see all the different ways that Dun & Bradstreet is evaluating your credit, so that then you can go in and you know, take action in those areas where you might be a little bit weak.
Okay, we'll ask, I think there's one more for now. Oh, someone else just popped one in. Are there any free services that you recommend for checking business credit, like there are for personal credit, like Credit Karma, etc.?
You know, I am not aware of a free service for checking your business credit. Part of that is probably because you're there. It's assumed that you're a business and that you have the resources. However, the costs associated with that are, you know, as little as $30 or so, depending upon the business bureau that you reach out to, and the fee that companies like NAV charge is relatively low on a monthly basis. So I am not aware of any free services for checking your business credit profile. Okay. But I don't think it's very expensive.
Okay. Here's a good one. Does a loan from OnDeck detract or add to your business credit profile?
You know, that's a really good question, and it's going to be kind of a complicated answer, but I'll dive in and tell you. Just like a loan from the bank, OnDeck reports your credit history to the appropriate credit bureaus. So a good credit practices, a good history with OnDeck will in fact help build your credit profile. A merchant cash advance, on the other hand, is not a loan. It's an advance on your merchant trade account, and they do not report to the credit bureaus. So that does not help you build a strong business credit profile. So depending upon the place you're getting the financing, that's another question that you're going to want to ask them. Is this small business loan going to report my good credit behavior to the appropriate business credit bureaus? OnDeck does. So if you make your payments in a timely fashion and you make them as you agree, it will definitely positively impact your business credit profile. I hope that answered the question.
There's someone actually typed in an answer to a free service that you can check it. She said that with Credit Signal from Dun & Bradstreet, you can check your profile for free. I don't know how much. She said the information is pretty limited, but it's a start.
Yeah, that is a start. So go to Credit Signal at Dun & Bradstreet, and you can at least get a taste of what your business credit profile looks like. If all it gives you is your Paydex score, that will be enough to give you an idea as to whether you need to dive in a little bit more, so that you can determine if there's areas that you can improve. You know, one of the great things about the way your business credit profile is reported is creditors basically are looking at the number of positive notations versus the number of negative notations. So if today, for example, you have 5 negative notations in your business credit profile and 5 positive notations, they kind of wash out. So if you can start turning those positives into 10 or 15 positives in your credit profile, that's going to positively impact your business credit profile, because they're looking at is the majority of information about your business positive or negative, and that's going to make a difference in your profile.
Okay. All right, well, I think that's all the questions we have for now. There's a couple people who had questions that I said that you'd answer privately because they're a little bit more specific to their business. But that's all for now. Thank you all so much for joining us. Thank you, Ty, for educating us. And we look forward to seeing you in a couple of months. Remember, email me if you have any questions, and we'll be seeing you soon. Have a great rest of your day.
Thanks again.